Everyone, David Coe, the Core Real Estate Group. Hey, one of the things that we've been involved in lately are land sales, and I figured it'd be a good time to kind of take a bit of a deep dive on what kind of land and construction types of loans are out there. So today I brought in my good friend Brett Leitner with SoCal Mortgage. Brett is someone that we have done multiple transactions, all different kinds, and Brett has a skill set that I think captures both the private and the non-private type of loans that exist in this space. So, Brett, thank you for coming on. Tell us a bit more about SoCal Mortgage.
Yeah, thank you, David. Um, we're an independent mortgage broker, and the difference between a mortgage broker and a mortgage banker and a retail, if you work at a bank, a credit union, or a mortgage bank, you're what's called retail. You offer the programs that they offer within their bank or within their institution. And some of them, like the larger mortgage banks where I was for the last 13 years, was if we didn't offer it, they allowed you to broker some of it to outside sources. As an independent, we broker everything. And that's why we're called wholesale, because there's no mothership that I work for that charges overhead or anything, which makes our rates sharply lower on residential loans. Unlike a standard home purchase, the rates to a mortgage broker are going to be lower. And I've had SoCal Mortgage for about 26 years. And SoCal Mortgage was a division that I did all my construction loans, multifamily, commercial, fix and flip stuff through while I worked for other mortgage brokers and then mortgage banks. And then a year ago, I rolled everything under SoCal Mortgage.
Well, and that's why I think you're great on this topic, right? Because you've got so many tools in your tool belt and you need them for this. This is a complicated loan, right? Like we're talking about,
Yeah,
a piece
a
of dirt
special
that
skill set.
may or may not have a structure. Like there's hardly anything to secure yourself against if you're a lender. So why don't you start off by just kind of talking about how construction loans are different than a regular purchase loan for a structure?
Yeah, so a construction loan has, first of all, you close on a purchase, you buy a house, you close on a purchase. We do the loan, and we're like in and out of your life in 30 days. When we do a construction loan, we might close in 30 or 45 days, but we're in your life for the next 12 to 24 months during the construction loan. We
Yeah.
monitor the draw process, we monitor the fund control, we monitor the budget, and we monitor the problems because there are problems in construction loans, over budget, under budget, etc. So a construction
I
loan,
think the percentage of construction loans that we've had is 100% that we've had some kind of issue with, right?
yeah,
It is an imperfect science, and really, as a lender, you guys are a key partner on the development side, because we need to keep these projects funded to keep them going.
yes, yeah, and we know that, and our job isn't to like police it to the point to cause problems. Our job is to solve the problems, because in a construction project, you have to keep the money flowing. The bid contractors have to be paid. The suppliers have to be paid. And as soon as the money is constricted, that's what causes problems. So it's our job to make sure that the money flows.
Yeah.
So in a construction loan, generally speaking, there's either a house or a piece of land, and they want to build. They either want to build a house or take an existing house and make it bigger. And so the construction loan finances a portion or even sometimes 100% of the construction cost. And as we'll get into a little bit, hopefully, is some of our programs even finance the interest carrying costs,
Mm.
the insurance, the property taxes, and believe it or not, now we can even finance staging for spec builders.
Oh, interesting.
Mhm.
Well, look, I know there's kind of two types of people that take out these loans. There are the owner occupied, right? So I see a piece of land, I want to build my dream house, I need to build this. And then the non-owner ocs, right? So those are your investors or spec builders that are looking to buy things, but they're never going to live in it. It's purely for
Yeah.
investment purposes. Let's talk about the owner occ side first, right? And then let's talk about like one scenario where there's a piece of land and there is nothing there versus there might be a piece of land where there is a structure that you want to tear down and build. What kind of loan, what do those look like?
So if someone wants to build a house on a lot, and that the lot and they're buying the lot and the lot comes with plans, it's called RTI ready to issue permit. Sometimes they're buying it in a housing development, and here you buy the lot and here's your plan. And in many cases, you even hire them as your builder. We can do what's called a one-time close. So the loan will acquire the lot, finance the construction, and when the construction is over, that loan is a 30-year fix, and it just rolls for another 30 more years or 29 more years.
And the
Fantastic
construction is
loan.
done through the draw process, so it's issued up front. You start paying interest on it up front, but you don't have to refi when you're done. It's just going to convert to long-term debt.
That's called a one-time close. It's for owner-occupiers only. You have to have the plans with the purchase, or you have to get a land loan first. Then we refi it into a construction loan. It's a great loan. I know it sounds crazy and it's difficult to quote interest rates because we're recording today on May 20th and who knows when this is. But the current rate on that right now is around, believe it or not, around 6.5% for a 30-year fixed rate construction loan. It's unbelievable.
Which, I looked this morning, the average 30-year fixed residential is like 7.2%. So it's actually about 50 basis points lower than what is the rates as of today on this recording. So
yeah, it's a phenomenal product. The downside of it is the maximum loan amount for a single family in LA County for that program that we offer is $1,209,000. So in LA, in that better area, that's going to be difficult unless somebody throws a bunch of their own money and just needs a loan for $1.2 million. Right. Some of the large banks do offer jumbo owner-occupied construction loans. And we have them as well, the ones that don't fit the big banks.
And I assume those are not 6.5% on their rate.
No, that's right.
And they are probably a premium. Would you say 50 to 100 basis points over whatever a standard 30-year is?
No, gosh, no. Probably about 3 to 4% higher. So depending on the loan to value and the strength of the borrower, it's going to be anywhere in the mid 9s to the mid 10% rate.
Right. Are there prepayment penalties on that?
There's not. Yes and no. We don't call it a prepayment penalty. On that one, it has a 6-month guaranteed interest. They have to keep the loan for at least 6 months.
Okay. Well, but if I'm 2 years in, which is who's ever going to finish a construction project in 6 months anyway?
That's right. And we will write those long. On an owner occupied, we will write it for as long as they need.
And what's the max do those jumbos go? As high as warranted?
Sky's the limit if the deal makes sense. That's right.
Got it. Okay. All right. What else? If you are owner occupied, what other options do you have? I mean, what if it doesn't have RTI plans? Then what do you do?
You have to either buy the lot for all cash, or you can get a land loan. Land loans are rare, but they do exist. Historically, they required about 25% down. I was pretty happy to hear this morning when I was doing some homework that you can go up to 35, even 30% down if it's a really good deal. If there's plans to build, we can even put in like a pre-commitment for the construction loan.
Got it. Okay. All right. Now, anything else for people that are looking to build their dream home?
Nope. Unless you want to talk about if they want to remodel their dream home.
Let's come back to that one because let's talk about non-owner occ first, right? So now let's say I'm a builder. I want to build something, buy it, build something, sell it at a higher price. Like that is, I know, a mix of both private and kind of some bank money you have options for, correct?
Yeah. It's actually, believe it or not, we do historically a lot of it private, and we have some family offices that like to do them, but we've got better programs now that's institutional. We'll finance if you're a builder and you've already owned the lot. Let's say you bought the lot a year ago, maybe you have a loan, maybe you don't, and now you're ready to build and you want to build a property and it's, I don't know, $100,000. I mean, $1 million of construction, just for round numbers. If we will finance 100% of the construction on an experienced builder. So somebody who's done this at least 5 times in the last couple of years. We'll finance 100% of the construction. We'll finance 100% of the interest, the taxes, the insurance, and the staging. It's incredible. We will not finance 100% of the land. So if the land costs $1 million and the construction is $1 million, we'll finance about 60%. So we'll do like $600,000 on the lot, million on the construction plus all the other soft costs.
Hmm.
It comes out to be roughly around 15% owner's equity. So of the total project, the land, the construction, everything, they have to come up with about 15% for an experienced builder.
Right, right. And if I'm inexperienced, or what if I have some experience? I've done this before, but there's a lot next door. It looks interesting. I'd love to build something like that. How deep does it? Can you even get a loan like that? Or
Yes,
okay,
yeah, you can get a loan. Because you don't have the experience, they're just going to want more skin in the game. So instead of only 15% skin in the game, they're going to want 20, 25% skin in the game.
which is still fairly
Mhm.
reasonable. I mean, if I was buying an investment property, I would be putting at least 25% down for something
Pretty
that
much.
was just a value add play.
Yeah. And this is all predicated on the assumption that the property is completed value is significantly higher than the cost of construction. So if
Right.
we're financing 100% of construction, we still want a 75% LTV at the end. We want the completed value.
Okay. Fair enough. Okay. What else for non-owner occupied for investors?
Um,
On the institutional side, like are there actual Fannie Freddie or anything like that for this kind of product?
Not that I'm aware of.
Okay.
Not that I'm aware of. There is some multifamily agency construction loans.
Yeah, more than 4 unit type of stuff. And
Yeah,
usually they want you to have some kind of deposits in the bank as well, right? Like if
yeah.
you
And there's HUD financing. I don't specialize in HUD financing, so that's out of my lane.
okay. All right, well, let's talk about renovation loans because really, when you think of construction loans, there's all kinds of people that may already own the property and want to do some kind of renovation or significant addition. That's a construction loan too. Or maybe I'm going to buy my neighbor's property. It's got good bones, and I
Huh?
just want to renovate it before either I live in it or I want to try to sell it. What do those loans look like?
Yeah. If you own your own, you're talking about on a primary residence.
Yeah.
Yeah, we'll finance the improvement on the primary residence, a factor of the cost to improve. So if you've already owned your house for a handful of years and now you want to add a second story or an ADU or just put $1 million remodel into your house, as long as the future value, the value of the home when it's completed, makes sense to the total loan to value, we'll do it. In fact, if you have a 3% interest rate first mortgage and you don't want to give up your 3% first mortgage, you can keep your first mortgage and we'll finance this construction on your primary residence in the form of a second. So we'll put a big construction loan second right behind it. The
Does that
downside
have
is,
does that have draws, or do you guys just issue
yes,
all those funds? So that has a draw process as well.
they all have draw process.
Right. And then I
Mhm.
assume that the draw process, I'm only paying interest as I draw the loan down, right? I don't have to pay the interest on all that money up front just as I use it.
Unfortunately,
Mm,
if you have a primary residence and you want a second mortgage on that program, it's private and they don't have, I forget the type of lending license that's required for that.
mm.
They fund 100% of the construction loan on day one. So you're paying interest on it day one. It sits at an escrow company and the escrow company handles the disbursement. So unfortunately on those, we do have lines of credit. So if somebody has a tremendous amount of equity in their home,
Right.
we can give them a line of credit up to $500,000. Cost is next to nothing, and that you only pay interest for use. So when all possible, we try to get them that the rate's lower, the cost is lower. Yeah.
And what else? What other kinds of options?
But back to your question, because it was a great question. On all the other construction loans we talked about, for the most part, you only pay interest as you draw on the loan.
Yeah, that's usually for how though it's the upside. The downside is when you're at the very end and you're trying to get all your approvals, you're now paying on a maximum amount of the draw because construction is done. So
Yeah.
the sooner you can get projects wrapped up, the better from a debt standpoint.
Yeah, unfortunately, there's just not a lot of lenders out there. You could call 50 lenders and say, I want a construction loan on my primary residence or a private money loan, and you're going to get all no's. I have a source that I've been using for my entire career, the same source. and they are one of the rare ones that will finance on primary residences.
All right. So what if it's not primary? What if it's a second property or just another property? What does that look like?
That same program will work on a second on an investment property.
Mm-hmm.
If it's for a property you intend on keeping and holding, that would be basically the same program, maybe a little bit easier because it's no longer owner occupied, so it fits into a different box as far as compliance.
Mm-hmm.
But same type of loan, very easy. If it's a home that you maybe already own and you intended on fixing up to flip, now we talked about the possibility of throwing a construction loan on there, like a real traditional style construction. Construction lenders, like traditional construction lenders, don't like it when there's a pre-existing structure. They want land.
Right. Yeah. Dirt ready to build, or at least cleared and, somewhat ready to go.
Yeah.
Cool. All right. Well, hey, we talked about land, so I think we covered everything we wanted to cover. Thank you so much for being
thanks, David.
Info. So if they want to find you more, how do they reach you if someone's interested in this type of loan product or any kind of loan product?
There we go. Check it out. Shameless plug right there. SoCal Mortgage.
Ready to go.
SoCalMortgage.com. Brett Leitner, 310-968-7568. Or call David. They all know how to reach me.
Call me. I will get you in contact with the man, the myth, the legend, Brett Leitner.
Yeah. No, you are unique as a realtor, because a lot of realtors sell a lot of homes, but not a lot of realtors sell development projects or developable projects, and have personally, have a hand in that. So you ask good questions, and you have a lot of expertise in that. So thank you.
Well, thank you. And hopefully you found this interesting. If so, please like, share, subscribe, whatever your option is. And again, Brett, thank you so much. David Coe, the Co Real Estate Group. Take care.
Thanks, Dave.